So thank you so much for taking out time for us. Could you just talk about the volumes that have gone by in this quarter?
We had a pretty robust quarter two where our overall revenues went up by 4.7 points. The EBITDA margin was at 82 and the profit after tax was a very good story at 13.3 points. So I think that has been a very solid sort of a overall performance. The traded volumes on exchange went up by 3 points despite a much lukewarm, much sort of a slip in the overall electricity demand in the country right now. And that happened on the back of a few things. Clearly, there is an economic activity which is subdued right now. The index of industrial production went down to negative 1.6, which is the lowest in the last 8 to 9 years. And then we also had a climate intervention. The monsoon in the country really ran for much longer time. Good in one respect, but it really has an impact on the overall agricultural load of take. So I think those are the things which led to an overall macro demand being subdued. But in that, exchange demands went up by 3 points, and like I said, I gave you the financial performance anyways.
Hi, Nantara here in New Delhi. So for the period that's under review, what kind of overall electricity market dynamics did you witness? Talk to your shareholders, talk to the analyst community.
At one level, the electricity market is going through a huge amount of transformation. It's a phase of transformation for the power industry. And let me give you a few reasons as to why we say and why we feel that way. Clearly, there is a shift in the energy mix. And India, as a clear signatory to the Paris Climate Control Agreement, we have a commitment to move towards a 40% of electricity generation through renewable sources by 2030. Now, demand in India is bound to go up on the back of economic activity, on the back of rapid urbanization, on the back of the fact that government is committed to providing 24/7 power to every consumer and the last mile connectivity, which just means that there will be a huge amount of more number of hours of energy available for every consumer every day. Now, that's at one level. The bigger change that we foresee is in the space of consumerization of power. It would be very cool for all of you, for everyone, to be able to demand the power sources and demand from where they get it. Choose your power provider and choose the kind of type of power you want. And for the sake of simplicity, let me restrict the choice of power to just two, renewable or a fossil fuel based. So we will shift towards a huge amount of consumerism in power, and it would be very cool for you, for me, for everybody to make sure that you get the ability to source your power from your next door neighbor. That allows you to reduce the power consumption, to reduce the cost of power because the transmissions are not available there, not required to be done, and you get it when you want and you pay for it accordingly. So this is really the concept of power as a utility in the real sense, which has been existing. But
talk to us about the physical trading in electricity in the day ahead of the market.
The day ahead market day ahead market is about 90 points of our overall traded, and term ahead market is the balance. A huge amount of growth has been witnessed in the term ahead market. In fact, term ahead market, which is contracts of the nature of 2 days to 11 days, has seen a 425 points jump year on year. Now, that's fairly significant, and that really tells you that there are contract types which the customers are now preferring to do over a longer period of time than just the next day, which is the day ahead market. And I don't want to, I just want to sound a word of caution over here. We still continue to believe that the day ahead market will continue to be the preferred way of trading, just because the manner in which the discoms are structured to trade on the platform, because it's just the day ahead. If people get the ability to forecast the requirements for a longer period of time, even if it is 2 days or 3 days or 7 days or 11 days, you will find that the activity on the term ahead market will start to become that much more volatile and that much more aggressive. Right now, we still continue to see that a 90-10 mix on the day ahead and term ahead will continue, but term ahead seen a very, very robust growth in Q2.